All right, Harry, just before we get into it, and I know everyone loves to do introductions and we'll get there,
Yeah.
but I just want to know in the simplest terms, what is it that you guys are actually offering in terms of your Sharia compliant investments?
That's a good question. Yeah, straight into it. So, in element, it's a way of investing in property without all the hassles of physically owning a property, right? So it's a structured investment product. There's two models, if you like. One is what we call a portfolio model that gives the investor a fixed return over a 3-year or 5-year period. They have a choice to have either quarterly income or to leave the funds in there and get a payment at the end of the term, right? That's one model. The other is site specific, where it's really simply just a profit share on a individual development that we're doing. And that's it. It's a hands-off, hassle-free way of investing in property.
Okay, great. So we've got the portfolio and then we've got the individual site.
Yeah.
How do investors actually make their money? Where does their money come from?
So we're property developers, and they make their money in the same way that we do, and that's from successfully building and selling real estate, right? So we build and sell homes is what we do. And what the investors are investing in is the financing of us doing that. So it's a share of the profits of a single development, or it's from cash flow generated from a number of developments we're doing at any given time.
So they're never going to get kind of rental income from people living within these properties?
No rental income. Our model is really simple. It's build and sell, and that's where all of our cash flow is generated.
And how do they get their money out? Is there a maturity date?
Again, that depends on the model. Portfolio model, yes, there's an absolute fixed maturity date. They know exactly what they're getting and when they're getting. And the site specific is a little bit more speculative because it's tied to the profit of an individual development. As much as we try and control every element, we're very experienced. We've been building and selling homes for 30 years. It's still not an exact science, right? Things don't always go according to plan. So we can't say this is going to take exactly 3 years to the date. So we give an estimated time frame. That development has to be finished, and we have to have sold the homes to generate the cash flows, paying them back.
Okay.
So have profit.
So how many projects have you actually done and built?
Like over 200 as a company.
And when we say project, what size are we talking? We're talking about block of flats, or we're talking about streets?
Everything in between, right? So we've done from single homes, like you're talking really luxury high-end single units, a single detached house, all the way up to, I think the largest scheme on our books right now is 150, what I call units, and that's a mixture of apartments and townhouses, and that's in the heart of Exeter. We've also just bought the old zoo in Bristol Zoo, which is going to be a 200-unit scheme that we're looking to get started on later this year, early next.
Do the local residents of the Bristol Zoo know this?
Yeah, I do. What are you talking about, the animals or the people that live here? The animals are super happy because the Bristol Zoo Association, I forget the exact name, they've essentially moved to a much larger location outside the city. When you look at, it's quite a big site for us, and yet 200 homes is a big number, but in terms of for animals, it's not a great amount of space. So they've got a much nicer new home. Apart from the gorillas are still there apparently.
Everything.
Yeah, they won't be once we build the homes, but yeah, they're getting rehomed at a later date.
When I drive around, I generally stay in London, but when I drive around London, I don't see any property developments that say Acorn Property on them. They normally say Bovis Homes or one of the other companies.
Yeah, so we do less and less in London. We started off very London centric. We're still a family owned business, and it's a husband and wife team that still run the business to this day. But we have first successes in Bermondsey. So a lot of what we did originally was on the South Bank. Done close to 50-ish deals in and around that area. London got and is expensive, and as a medium-sized developer, which we are, we're not a national house builder. You're competing not just with other developers, but it's an international marketplace, London real estate. People buy it from overseas just to park up cash in property without developing it. So it's a very, very big market. We're just another player amongst many, right? So we're doing less and less in London and more in the southwest. Hence Bristol. We've got offices outside of London now in Bristol, Exeter, Cardiff, and Newquay as well. So that's kind of our patch. And it sounds a bit odd when we say it, but we are one of the most successful, or the number one medium-sized developer in those regions. People know us of our size, of bespoke schemes that we like to do.
And we have we hear so many people saying that property isn't as hot as it used to be. I think mainly they're coming at it from a individual investor, and they're thinking about all the taxes involved and all the hassle, and it's not as nice as it used to be. And the previous generation before us had it great because property prices are rising so fast, but now, cost of living, property prices have become expensive, and it's not as interesting as an investment for anyone. Would you say that's the case, or?
Yeah, I'd agree with that statement today. I think that all markets go through cycles. They all go through ups and downs, and we've been doing this as a business for 30 years, right? So we've got experience in a variety of different market conditions. Where we are right now, there's a lot of things that have made profiting from property as a landlord much more challenging, from new rules and regulations that come in place, from taxation, from interest rates, right? If people are buying these things with mortgages, then it's not as profitable as it once was. So yeah, the property market in the UK from that perspective is certainly challenging. The whole market has been, even from a developer's point of view, for the last few years, for sure. Your mixture of higher interest rates, pandemics, Brexit, all of these things, it hasn't been a smooth ride, which if you are looking to invest in property in any capacity, making sure who or where you're doing that with is absolutely key, right?
But you still think there's a investment case to do that for now?
100%, right? The UK market from a legal perspective is super safe. It's a very well regulated market. You're protected by good, strong laws, and the fundamentals of any good investment are supply and demand. I think we can all agree on that point. Mm-hmm. The UK is an island. I don't see us doing a Dubai anytime soon and starting to reclaim land. I don't think we could do it if we wanted to. The amount of time it takes us to build any sort of infrastructure in this country, but that means that we're restricted by nature, the amount of land that we have. Net immigration is still at a positive. There's more people coming into this country than there are leaving. The population's increasing. There's already a housing crisis, a housing shortage. We never hit any of the targets that the government set. So the fundamentals are there for a strong market from a supply and demand perspective over the longer term. The only thing that I think is going to change that, or what will help with that on both sides, is changes to the planning laws. The planning system is fundamentally broken. If you add that into what I just mentioned a moment ago, then you've got kind of a restriction on the new homes that are coming through as well on supply. So the basics for a strong investment case are there, for sure. It just might not be the massive growth that previous generations have experienced, but there's a strong and steady market there, in my opinion.
All right, and when you talk about the investment case, I've looked, and correct me if I'm wrong, but the rates of return kind of were mentioned maybe between 10 and 15%, maybe higher, maybe lower?
Yeah. Are you asking how and why we pay those returns, or where those numbers are coming from?
They're the types of returns that people can expect.
Yeah, absolutely. Right. That's what we're offering on our investment products. I think it's probably worth kind of expanding on how and why we do that, right?
Yeah.
Because when we're talking about these investments with investors that might be experienced investors, but might be new to property or development finance in particular, those are pretty attractive numbers, right?
Yeah,
and that's one of the things that
shocking.
yeah, and that needs explaining, right? We just come off of 2 decades of incredibly low interest rates, with most people being conditioned to the fact that you're struggling to get more than 1% return on anything, right? First of all, we need to make it crystal clear this is not a savings account. You're not just parking your money in the bank account. It's an investment. We're using that to go out and build homes with. So there is a risk element to that as well, which is also going to be worth talking about. But those returns are bang in line with your regular development finance that either people charge you or you have to pay as a developer. For us, we'd like that to be lower. It's all about cost of capital for us, but it's important to understand where that comes in our financing stack. A typical property deal that we do, I believe, is the same as probably 90% plus of the developers out there. If you look at all of the cost associated with successfully doing a development, buying the land, building it, financing costs, everything, typically 80% of that cost you can go and obtain from a development bank or a development investor. Some of that can be Sharia-compliant, like our investment products. Some of that is just regular debt, right? So either or, you can go and get that from a development lender, 80%. That leaves a 20% shortfall. The reason there's a shortfall is that your development lenders are never going to lend you 100% of the cost. It's to their own internal risk policies. They're going to lend you roughly 80%. And what we don't want to do as a developer is tie up all of our own cash, making up that 20%, because that constricts the amount of deals that we can do. And in the development game, money's a tool, really. We need to have cash to be buying and acquiring new sites. As a developer that's getting that number one spot in the Southwest, we get a lot of things brought to us off market, prestigious deals. If we like something and it's a good deal and we don't have the money to buy that goes to somebody else, a competitor. So we need to constantly have in cash. So we like to bring investors money into that financing stack. So 80% senior, and then there'll be 10% roughly of our own cash in the game that leaves that 10% gap. And that typically is what you'd call the mezzanine finance position, right? That goes in between the bank and our cash. And if you do any research, mezzanine finance in property is going to cost between sort of 12 and 20% per annum in this market. So our rates are absolutely in line with that, because that is ultimately what we're using investors' cash for.
All right, so we used a few technical terms there. One is that the first level of financing being the senior finance or the senior debt in some cases, and they essentially have first claim on any assets if the project was to go bad.
Yeah, from a risk perspective, absolutely right. That senior ranks first. If something went wrong, they would have a claim on that land asset.
And then the money that you raise from investors is the level above that.
Correct, yeah.
Which is known as a mezzanine level of financing.
Yes.
So you have less risk. Sorry, you have more risk.
Yeah.
And that's why you can expect those decent levels of return, which you can get.
Correct.
And if we talk about the risks,
yes,
in my head, I'm thinking, I didn't manage to sell the property for as much as I thought I could sell, because the property market is going down in value. What else? There turns out to be a big mine underneath the land, and all the land is going to collapse, and it was a waste of money. What are some realistic big risks that are going to come about, which either you've seen in the past or you kind of expect that may or may not happen?
That list can be quite extensive. The way that I would describe it to an investor is that you don't need to worry about all of that, really. Your risk is on us and our ability to manage those risks.
Okay.
Right? And that's what you get with investing with an experienced developer that's been doing this for 30 years. We've been through most things, including finding a World War II bomb underneath one of our sites, right? So when you say a mine and site collapsing, you're not far off. But we successfully navigated through that. There are all sorts of challenges. Ultimately, your risk is on how good are we at selecting the right deals and managing that process through and selling them profitably, which again is something that we've done now hundreds of times and very well. But there are risks involved, market conditions, markets in terms of things like interest rates affect developers, because it makes your cost of borrowing or your cost of finance, depending on the structure that we use, more expensive, which squeezes your margins. So things like increased interest rates in recent years have had a negative effect on the property market as a developer, for sure. It's more expensive, especially when that all happened quite quickly. Interest rates went from 0.5% to 5% in less than a year. So that was unexpected. But then as time goes on and you navigate through those situations, yes, you might not make as much money on some deals as you thought. You then start to price all of that in. So you'll buy some of your land and your deals cheaper, and the market adjusts. And now it's starting to step down again. And as a developer that's been around a long time, we've gone through all of these market conditions: high interest rates, low interest rates, financial crisis, the things that you can't possibly have seen, like COVID, right? No one could have guessed that was coming in 2018. And some people don't survive these things. Like, it's not saying we're impenetrable, because we're human like everybody else, but we have gone through a number of these things, which means we're experienced. Even financial crisis, we've been through these things and we're still here. So there's a lot of risk. There's financing risks. There's general market risks. Yeah, there's issues. It's construction. Delays can happen, whether it's procurement of materials, cost of materials increasing. All of these things need to be carefully managed, which is why it's crucial to select the right partner you're doing these things with.
So if we take it back a step, because obviously we covered a lot very, very quickly.
Yeah.
So you guys have been around for 30 years, predominantly building in the Southwest, large projects, and now you're starting to offer these out kind of investment products as a side. But that wasn't your fundamental part of your business, right? This is only like an additional part that's only come about recently.
Yeah, correct. The reason that we don't. I always say to people that we're a developer first and foremost. We're not even really an investment company. We're not looking to charge you administration fees, yearly management costs, build a book of investors and then sell it to an investment house or anything. That's not what we're looking to do. It's purely to fund our own expansion and build our own community of investors, which takes care of a certain part of our financing requirements. That's our motivations behind it. And we've been doing that since 2019, so coming up to 6 years now.
I think it's fair to say Muslims, investors, was not something on top of the priority list. So where did this come about? Where was the Sharia-compliant investment product?
It wasn't on the day one business plan, no. And I think that it's fair to say that we're developers first and foremost. Now we've got the investment side of the company. Yes, we've got some people that are very experienced in that. But it's something that just evolved naturally, right? We're not just forward thinking, we're open-minded and we're open for business as a company. Also, the fact that we're still family owned, I think, means that we can be flexible and we can adapt. We don't have layers of bureaucracy to go through. And what we found is that when we were out there and launching the investment side of the business and we're advertising, if you like, for investors, we had a number of people from the Muslim community that said, I like this concept, this hands-off, hassle-free way of investing in property. And my experience so far, a lot of members of the Muslim community, particularly older generations as well, have had very good experiences investing in property, physical property. So property is something that Muslims, generally speaking, are comfortable with. So this way of lower entry, easier access, without a lot of the pain points that we've touched upon of the buy-to-let market at the minute was attractive. So they were approaching us saying, we like what you're doing, we like this concept, and in terms of the fundamentals of where we're investing, i.e. property development and the type of things that we build, that ticks a lot of the boxes to make it Sharia compliant or halal investing. But it was more of an issue with the initial structures. They were bonds, loan notes, fundamentally debt-based interest-bearing products. That we had no idea that was a problem, really.
Yeah.
And we had to go on a journey of education because it didn't make any sense. We're looking for investors, we're finding them, they like us, they want to invest in us, but there's some fundamental issues with the structure and we needed to see if this was something we could overcome, because it wasn't just an isolated incident. How much we try and be accommodating, we can't rewrite everything for one person. Yeah, this was a whole community that we discovered was there in my opinion, still quite an underserved area of finance in the UK. So yeah, we went on this journey of education, looked for advice, and that led us to Amana Advisors, who are a well-respected advisor that specialises in Sharia-compliant finance. And we engaged with them a few years ago now. Spent a long time going backwards and forwards because we also, if we're going to do something, we want to do it properly, and we also understand the importance of faith-based investing, right? This isn't something that we could take a chance on. So we had to make sure that we got it right, and we went very heavily on them to structure products that investors are comfortable with, and as investors are comfortable with.
Yeah, absolutely. And as a result of this, you've come out with 2 Sharia-compliant products: the fund,
yeah. The portfolios,
and then the site.
Correct.
But from my understanding, you also have done projects with other partners like Curate.
Yeah, so Curate, I think we did a deal with them coming up to 2 years ago now, and that was in some of the fairly early days where we had launched the first, what we called the Sharia compliant version of the portfolio product that we have, and we didn't get it quite right. First of all, from like I guess a structuring point of view was fine. The compliance side was fine. It was just more of, we put this together to service the inquiries that we had, but then we thought, how do we get this out to the wider market? And that is fairly indicative of our journey on the investment side anyway. We outsourced a lot in the beginning to third-party agents that referred investors to us. And that's kind of the journey that we followed with Curate as well. When they were looking for partners to place money, because they are an investment company. And where can they place money? Of something that ticks their boxes, which of course is the Sharia compliant nature as well.
And how have you found the general kind of like uptake from these two products that you guys have created?
Do you know, it's been amazing. I think that sometimes when, as I said, we didn't get it right, first of all, we realised that we had to create a lot more content, spend a lot more time understanding the community and looking at what their needs were, and create really a whole side of our business. We haven't really done a spin-off of Acorn Property Invest that's just Sharia-compliant. Maybe that's to come in the future. I think there's a solid business case there for it. But for the minute, it's all underneath one roof. But yeah, the market uptake, once we created that content, spent a little bit more time training with the guys and making sure everybody understood really fully what they were talking about, it's gone really well. It's one of the fastest growing sides of the investment business in terms of new investor. And quite a different demographic as well.
Which ones had more interest, the portfolio or the direct investing into sites?
Both have had interest. I think probably the portfolio, because it offers a higher degree of certainty. They're fixed returns and fixed timeframes, which people like certainty.
Yes.
I think particularly if you're new to a company, then at least you want to see something deliver. The site specifics are a little bit more speculative by their nature, and on the Sharia-compliant version of the site specific that we have, it's just a straight profit share, straight equity deal, really. So again, the time frames are estimates, and those returns are estimates. But we've done one of those so far that's fully funded. We closed that a month or two ago, and that went really well. The uptake was strong on that.
And if someone wanted to try you guys out, what's the minimum investment on both of these two things?
And it ranges on the products, but around 5,000, between £5,000 and £10,000 is going to be the minimum.
And is there a reason that you don't look at investors going less than?
There's some regulatory aspects with that as well. So we're not regulated by the Financial Conduct Authority. The reason being is we don't need to be, because we're not. Once we engage in an investment activity, we're not raising money for anybody else. Essentially, we're raising money for our own business. So therefore, we're not required to be regulated. And this is always a difficult thing to explain, but the regulators say, even though you're not regulated and you don't need to be because you're operating in these exemptions, you can't just offer this to everybody. So there's categories of investor that we can offer this to, which are called high net worth individuals and self-certified sophisticated investors. So unfortunately, it isn't open for everybody at this stage. If you fall into one of those two categories, then you can invest. And I think that if we set the minimum too low, it might attract the wrong type of investor, potentially. You need to understand some of the risks attached. As I said, whilst these are headline rates, it's not a savings account. It is an investment. It does carry risks. So people need to understand that. And we wouldn't want somebody that's brand new and completely naive, right? You need to educate yourself on that. There's also an admin side of things, of dealing with multiple small investors. We're not crowdfunding, really.
I'm conscious we've gone a long way now, and we haven't even asked, who are you? What's your story?
Yeah, that's we probably should have done that a little while ago, but
it's always fun to get into the fun stuff that people do. No one really cares about buyers, but it's a nice thing to get people understand that if you're ultimately talking about these products and you're saying words like Sharia, everyone's gonna know.
Who is this guy? I'm an unsuspecting face of Sharia-compliant finance in the property space of the UK. Yeah. I'm Harry Shaw. I head up the investor relations team at Acorn Property Invest. I've been with these guys for pretty much the last 3 years. My background is in fundraising for small to medium-sized businesses and growth capital for businesses as well. I think that what investors like from me is that I've sat on both sides of the table. I think when we spoke previously, I told you that I know one of the chaps that helped launch the investment side of the business in 2019, and at that time I was just exiting a crowdfunding business that I've been involved with, and was not at a loose end, but was taking my time to look at what I wanted to do next. And I've always had an interest in property. Prior to that, I've been more involved with some renewable energy deals and things like that. And I started to invest all my own money in property. I actually sat down with the guys at Acorn on the other side of the table, thinking of just parking up some cash with Acorn. And I had a choice whether to do that or to go and do some of my own developments. I chose the other option of trying to do it myself, which in hindsight wasn't the best move. But I thought it's all incredibly easy. Building and selling homes is straightforward, and partnered with a developer that I knew that was local to me, where we supplied some, in a business partner of mine, invested some cash and looked at a slightly different model and a way of doing things, and of actually being part of that development company, thinking it would make us more money, and learned the hard way. It's been an expensive lesson. Still got 2 of those properties left right now, if anybody wants to buy to let in East Grinstead. But yeah, I had to go on a whole kind of learning curve with that, which I don't regret at all, because it might have been an expensive lesson, but it makes you stronger. But I would have been much better off just parking some money up with Acorn and letting them do all the heavy lifting, because they've been doing it for a lot longer than I had. But you live and learn. So along that journey, I think I was talking with the guys at Acorn and some of the owners, John in particular. We always got on very well, and gave me a lot of advice on some ways, even though I didn't invest with them. Was like, yeah, look, you get on well, and kind of lent on him for a bit of advice over the last few years. And yeah, then thought, do you know what I'm good at is actually fundraising, managing, talking with investors, building these sort of networks. Let me just stick to what I know I can do. I don't think I was going to make it as a property developer myself. So leave that to the experts and run the investment side. So yeah, that's what I'm doing here, really.
Nice, thank you.
So I have actually tried out the Acorn Property Invest site. I put some money in. The only reason I did that, to be honest, was because if I'm going to talk about it, and if it's a solution that's offered out there to Muslims, I don't want to talk about it before I've actually invested.
Yeah.
So I logged on, tried it out, put money in a couple of things. And now the nice thing about some other platforms is that they'll show you if your money's gone up or gone down. But that doesn't happen with Acorn Property Invest. It's, you put the money there and it just stays static until you hear back when you've got a monthly payment, if you've selected the income option, or at the maturity of the product, you get all your money back. Do you hear nothing along the way, or do you send off days? Or
Yeah, you do. So whether you're investing in one of the Sharia products, or whether you're investing in one of our original kind of product threads, there's a number of updates you get on a monthly basis. So we have newsletters that go out that give you kind of just an overall health check of the business, tell you what we've been up to as a group. Development updates. We'll always, on a monthly basis, have a focus on one particular development as well, give you kind of an in-depth overview of what's happening on site. That changes on a monthly basis. And we'll keep you updated the whole entire way through. One of the things that we are working on very shortly, we'll have a statement software, so you'll be able to go on and download and see if it's one of the fixed return products that we have. You'll be able to go and see the balance, how much you've been paid when you were paid, or how much your investment is now worth. So that will be available soon on that side as an added feature. But until that's there and throughout the investment, we'll provide the email updates. You'll also have an account manager here that somebody you can pick the phone up to and ask any questions. They'll check in with you a couple of times a year as well, just to make sure nothing's changed with you. You're getting all the updates. Are you getting too many? Are you getting too few? We always like to engage with investors and see how you're finding the experience. So yeah, I think it's also going to be an evolution. We use a third-party software for our investment platform. We're looking in the future of investing and getting our own bespoke system made, because white label's great, but it's kind of
Limited.
Yeah, it is limited. There are other features that we would like. So maybe we'll be able to do that pretty soon. But
okay,
we are looking at growing that side of it.
so say you went for the equity side of a property because you thought, oh, that's exciting, I can get higher rate of return. You went for that one, and then there's an email update which goes, oh, rats have infested the area, the plague has come, I don't know. And then the investor starts freaking out and is like, okay, I want to take my money out. That's not an option.
No, it's not. That's also one that I guess we probably should have mentioned that when we talked about risk. I think that these are illiquid investments. Your money is in a property development. It's not like a stock or a share that's liquid that you can buy and sell at the click of a button. So if you do commit to something, even if it's a fixed term, 3-year, 5-year, you're in for the 3 years or you're in for the 5 years. Site specific, you're in there until that project is completed and sold. There isn't any real liquidity there. I would say this because I hope that we have a genuine, honest bunch of investors, but we're also still a family-owned business. If somebody called us on an individual basis that had a complete meltdown or issue in their life that they really needed cash, then we'd look and see what we could do. We couldn't guarantee that we could exit anybody early because we'd have to pull cash from somewhere else. But yeah, it's a case-by-case basis. But as a rule of thumb, these are liquid investments, and you are in for the full term.
So if you did invest in the equity of the site, you made the site, and let's say it has 30 different properties in it, market's slow, we sold 25, we haven't sold the last 5 yet, it might take another 6 months. Is that generally how it works, or are they all sold in one go?
No, they will be sold over a period of time. So on those site-specific investments, depending on our cash flow, we may start making some repayments. If there was something that was looking like there's going to be a significant delay, then as soon as we start encountering cash flow and we've paid the order of whoever's getting paid back, we can start working through that. So it might be a case in that instance of, okay, well, we've got only a few left to sell. Let's start getting some of this repaid. So you might get your principal capital back first, and they say, okay, we've still got a few more left to sell, and that's when we'll be able to run back the profit on it as well.
And then sometimes you hear about those horror stories with home builders where the walls are too thin. I don't know what else doesn't work in the property, and then the tenants are saying, "Oh, I just bought this house from XYZ company a few months ago, and now it's falling apart." Obviously, I'm going to a worst case scenario. In no way am I accusing you guys, but then if all the tenants start complaining and it turns out to be a problem and it turns out to be an issue, and then you're like, okay, no, we need to pay some of these guys back, but you've paid out all the money. Is there insurance in place, or is it like, no, our homes are still high quality, that never happens?
Look, it is development, right? I think that any developer that's done the amount of deals that we do, you're going to find what we call snagging issues, whether that's been a series of faulty boilers we might have installed at some properties that we need to go back and rectify. And it all depends on who the contractor is. Some of this will be the liability of the contractor.
Yes.
So just to explain for your listeners, whilst we do as much as we can, we like to control every part of the process. We do have a reliance on third-party builders to some degree. We have launched a construction side of our business now to mitigate that. So we have had problems like most developers we've had with contractors in the past, but that's just part of doing business. So that might be on the contractor that needs to go back and fix these problems, but things are covered by either their insurance or on new build homes, they often come with a 10-year warranty, right? There's a 10-year new build warranty that's mainly to do with structural issues and things. But no, it's not going to be a case that the investors are dragged into anything past that maturity date. Once that last property is sold, profits distributed, that's the end of the story as far as the investors are concerned. If there's any issues there, snagging issues, things that we need to pick up, which of course does happen, then we need to deal with that. The investor doesn't need to worry about that at all.
All right, and I don't want to set unrealistic expectations, but sometimes when you invest into the equity of a property and you build a property development and it goes really well, costs are lower than expected, property market's really strong. If everything goes really well, have you had any project that's paid up, above 25% when someone goes into the equity side of things?
Not on Acorn Property Invest. No, in the past we've had before we launched this side of the business. Yeah, there'll be cases that we've excelled. I think on the site-specific investments that we've launched as Acorn Property Invest, we've had a few that have come to maturity now, and being completely honest, when we launched those in 2019, 2020, we've gone through a lot of difficulties in the market.
Okay.
A few of them have and they were before the Sharia-compliant products, and they work slightly differently. The difference in the site specifics previously is they had a fixed return, like a low fixed return, and profit share. So it's a minimum base of what they would expect. A couple of those, there wasn't really any profit in those deals to distribute, so we just paid them the fixed return.
Okay.
And a couple of them have been small profit share, so they performed lower than what we'd have expected in the original appraisal. But even ones that have been quite challenging, that we've paid investors back in full on time. There's a couple that are going to overrun slightly, but that's the more speculative nature of the site specific. And I think one of the benefits on the Sharia products is that we've actually launched them in a much better market. So I would actually say that they're probably likely to perform pretty much what they say on the tin in today's market.
And obviously, because people are investing into physical property, could they ever go down and have a look at it?
Yeah, of course, yeah. Depending on what the investor wants to see, we've got it all. We've got like probably 30, 40 plus developments at a variety of different stages of the pipeline. If they want to go down and see an empty field that we're just going through planning on, if they want to see something that's in construction that's still just holes in the ground, they want to see stuff that's coming up out of the ground, they want to see a site that's just being finished, or they want to see something that has just finished and we're selling the last few units, we've got it all.
So obviously, as great as like the UK is, one of the big things is tax.
Yes.
Do you have any tax wrappers on your investments?
Yes, we do. We have a relationship with a regulated crowdfunding platform that we've done a few ISA products with. So they hold permissions for, it's called an Innovative Finance ISA.
Yeah.
We've done a number of deals with them in the past, which are fixed return and tax-free. Obviously, it's using your ISA allowance. What we're in the process of doing at the minute is working a way forward to find a Sharia-compliant equivalent of that. The issue that we've encountered so far is with that investment structure and the regulation around that called the Innovative Finance ISA, the tax rules or the HMRC rules are that it has to be something that's debt-based. That's very clear. It can't be an equity offering. So there are some ways of doing it. We've had lengthy discussions with Amana advisors. So we hope to have something for our Muslim investor base that's more tax efficient moving forward.
How is the portfolio and the equity ones taxed?
So it's classed as a dividend, as a distribution of profit.
From both?
From both, correct, yeah.
At the end, when they mature, they're not treated as capital gain?
So on the equity one, we can look at. So I'm trying to think of the Sharia-compliant one and then also our regular one, because there's a blend on our regular one. But yeah, we can look at it as a CGT if it's just a distribution. We're buying back the shares at an uplift. But on the fixed return element, it's a dividend, it's a distribution of profit.
Okay.
Well, these things as well, when you get into the tax advice side of things, everybody's situation is unique with that as well. So as much as we have our set of advice on it, and we'll share that with you, it's well worth you going and talking to your own tax advisor on that as well.
That classic line.
Yeah.
This is not tax advice, not tax advice.
Yeah.
Yeah, one of the things, after I invested, I got a call saying, "Oh, are you going to do it as a business structure?" And I was like, "Oh my god, what do I need to do? Do I need to do a business?"
After that should have been before.
Oh yes, sorry, it was before. It wasn't before. And I was like, "Okay, no, I don't. I'm not sure." So, there does seem to be some different way to do it in a tax advantageous way, especially if if you have.
If you have a limited company?
Yes.
Yeah, absolutely. So there are, of course, pros and cons with that as well, and it all depends on the individual circumstances. I sound like I'm giving another disclaimer now. So on the if you invest via a limited company, there can be some advantages, but it all depends on how you're then going to take it out of that limited company, because ultimately if you're creating profit within that company, you're paying corporation tax, and then you're going to take it out and pay it to yourself. So it all depends on where you are, where you're at in life, your individual circumstances, your financial circumstances, and what it is you're trying to achieve. So, we're not tax specialists. We do try and offer a variety of different structures, depending on what the investor's looking to.
Did you ever get called talking about all this finance stuff over and over again?
Well, I'm avoiding you.
I'm just thinking, I hope this is the case.
Yeah, no, I love it. Maybe that's just me, but...
Have you ever seen anyone come and this probably makes no sense at all, maybe not even realistic, anyone buy one of these or invest in these properties via their SIP?
Not a SIP, no. So in theory, you can, and the SIP is obviously the self-invested personal pension. In theory, it fits in a SIP, right?
Yeah.
But the issue that we find is that most SIPs are done through mainstream providers.
Yeah.
And if it's not something that's quoted, if it's not an investment that's quoted on a recognized stock exchange, it's hard for them to transact, because how do they keep it? They act as the custodian of the investment. How do they document that when what we're offering is a private investment in an Acorn vehicle? So no, there is another pension wrapper called a SAS, which is a small self-administered scheme. Do you know much about those, or?
Personally, I actually don't.
Okay. We've got a relationship with a couple of SaaS providers, and people have successfully invested using their SaaS. It's something that tends to be if you're a company director, that you can set up one of these small self-administered schemes. You pay into, and you've got much more control. You can make those investment decisions yourself, like you can with a SIP, but it's just a much smaller vehicle. And as long as it's in line with kind of pension and taxation policies, then you can make those investments. There's quite a lot of benefits to that. So if you're a business owner, it's well worth looking into. Again, disclaimer, depends on your individual circumstances, but there's lots of quite cool things you can do with that. Like you can with your SIP. If your limited company, you can pay, I think it's around £60,000 a year as the employer contribution that you can pay from the business into the SAS per person, which then actually comes off of your corp tax bill, because it's almost like a tax write-off that's not classed as your profit on the business. So if you've got family members and people on there that's on that pension, you can pay quite a considerable amount of money each year in towards it, which you can then invest tax-free.
You have this scheme where you can buy commercial property via your SIP.
Yeah.
And we still haven't seen a way of doing it in a Sharia-compliant method yet.
Yeah.
So if you figure it out, you're like a big market.
Yeah. We're always looking at new things. The SAS thing we've got down, because we do some commercial property as well. So it's the same with the SAS. Ultimately, you have to be investing in commercial property. So we have we have deals that are purely in commercial that investment goes into as well. It's spark turning in my head, because actually I think that the way that a lot of those SASs work, it's almost done as like a third party loan out of the business. So it's something we probably need to look into and how that would work on a Sharia side of things, really.
We'll leave it to you.
I'll be calling him on advisors.
And then now, though.
Yeah.
Obviously, you guys have sponsored a couple of events.
We have.
Light Upon, was it Light Upon Light? No,
no, it was the Peace and Unity.
Okay, Peace and Unity.
Peace and Unity.
And I think that's one of the things that helped convince me, maybe it's worth a roll of the dice of actually looking into it. Because typically, I wouldn't look into anything that's not FCA regulated. But I just thought, big institution that lots of Muslims know of, and these guys, Acorn Property Invest, are sponsoring it, and they're here and they're there. And you've also more recently done something with the golf guys.
Yeah.
I don't know anything about golf.
If you'd seen me play that day, you wouldn't have thought I did either. So. We have. I think it's one of these things that if we're going to do something, and the community has been really welcoming to us, and it's fairly apparent that we're not from within that community. It's not something that we have always been familiar with, right? So it's a case of how can we engage with the community, how can we learn, and it's about immersing yourself in that. So we've sponsored a host of things. We've attended events as well. Yeah, Global Peace and Unity. I think that's run by the Islam Channel.
Yeah.
And we sponsored over a year or so ago one of the business awards that they have, the business awards.
We applied, we didn't qualify. Next year.
Okay. I've got the guy you need to talk to. Yeah, I'm sure you can get nominated. But yeah, last year we sponsored an award there. We've known some of the chaps there for a little while, so we've got a good relationship with those guys. And they said to us, let the Global Peace and Unity, which I think it's not an annual thing. I don't think they'd run that for the best part of the decade.
Yeah, it's been a while since they've been around there.
Yeah, so it was quite a big deal, and we said, yeah, absolutely, we're coming along, and we had a stand there talking about what we do with members of the community. And now this year we've been nominated for the Islam Channel Business Awards in 2 different categories.
A year after you sponsored it.
Yeah.
Oh,
Yeah. They've been asking me if I want to sponsor like this year. I'm like, hang on, we've just been nominated twice. If we do, does that mean we might win? But no, I'm sure it doesn't work like that. So, yeah, no, we've been sponsored. We've been nominated for that this year, which is great. And it was a great event as well. I think as like a white English guy, I think one thing that I've been really taken aback with is the sense of community within the Muslim community in the UK. And it's one thing that maybe it's just being in London where it's such a big place that everybody's so busy, but I feel that there's a real sense of community there that I haven't experienced like that.
Yeah, it's strong here because even like I lived in Dubai for a few years, and you don't get it there.
Yeah,
to the same extent. Like here, it is. It's like a grassroots level community.
And everybody's super welcoming. Like the Muslim Golf Association,
I find that so funny because I've never pictured Muslims playing golf.
There's some good players there, I'm telling you. Yeah, and it's so well run. So I think it was set up by a chap called Amir Malik, and we got on with him really well. We actually had engaged with him, I think online, we'd seen a few things, and then met him at the Global Peace and Unity Festival. As we was having a wander around, he was showing, I think it was like a mini kind of give it a go golf thing that you had there for total beginners, and just got talking to him. And he said, yeah, look, there's a conversation, we're looking at doing some big things, and he's growing a really, really good business and an event there. So when the opportunity to sponsor, they've got it's like a mini tour they're doing called the Race to Mecca, right? And there's 5 events throughout the UK this year at top UK golf clubs. There's different categories. It's so well organised, honestly. Everything that he's, when someone's like, we do this, we do that, I was like, okay, look, I'm sold. I'll give you the sponsorship money. I hope this is what you say it is. And it's that and more. It's a really well-run event. They've got 5 events throughout the UK, and then it culminates with an event, a 3-day golf event in Saudi. But prior to the golf event, there's obviously there's a pilgrimage to Mecca and Medina that you can do as well. So it's a really cool thing that he's doing.
Can we join? Or do you have to be good at golf? Do you have to know how to play golf?
Golf helps. But yeah, look, he's one, but there's a beginner's thing as well.
I wish I get into it. Yeah, I get into it.
There's about 100 people that turned up on the day. Everybody was super friendly and welcoming.
We'll just sponsor it. So then you have free ticket.
It was good.
What's funny is I've worked in finance for like 10, 12 years now, and my colleagues always go play golf. I never go with them. I'm like, I don't know how to play golf. I don't know how to do it. But if I started back then, I'd be half decent now.
Yeah, it's funny. It's so time consuming.
Yeah.
Honestly, check them out. They're the guys to go and see with it as well. It's a really good community affair.
Can you play if you're not Muslim, or is it?
Yeah, of course, we played. Although when me and my colleague rocked up to the sign-in, the guy kind of did a double take. Was like, yeah, because we're here for the Muslim Golf Association. We are sponsoring it, but we're going as well. So yeah, but they're welcoming to everybody. They're a good bunch of guys there.
Come to think of it, when you say, we're not Muslim, but we do this Muslim golf event. Come to think of it, when I think about the other different Sharia-compliant providers out there, they're all, Muslim-owned and run businesses. Unless I'm forgetting someone. But it's funny to think that there's such a market opportunity here. It's just that lots of people haven't looked at it. And it's pretty much what we've seen, because we talk so much about Sharia-compliant investing, and there's such an interest in it, and there's people want to look for different solutions that suit them, and people who have worked towards the needs of Muslims. And it's just so inspiring to see at least one company is actually doing something, and they're not even run or owned by Muslims. They just see that there's demand there, and they go. It's not even a let's help out you Muslims. It's a commercial thing. It makes sense.
Do you know of anyone else that's thinking of doing the same switch? Any of your competitors?
If any competitor listening, there's a terrible space to be in. Don't waste your money.
The investors
investors, they never come through. No,
they take all the time on the phone.
We stick it out for you.
Do you have anything else on the flip side? I mean, I don't know how big of an issue this is. I think a lot of Muslims do face a bit of racism here and there in the UK. Personally, I think I'm very lucky. I've never actually felt anything in my 34 years of living here in the UK, unless it's super subliminal and it just always goes over my head. I've never noticed anything. But every so often you read something online where a business says, we're selling halal food, and I think people come out with their worst personalities online, and they're like, I'm never coming to this business again if you guys sell halal food, and all that stuff. But would you say you've experienced any of that now that you offer Sharia-compliant products? People are going, what are you guys, a Muslim company now? What, we don't want to do this, or...
No, in short, not from any investors of ours or anybody that's made any inquiries with us. Funnily enough, the only one thing that we have encountered was, I'm not going to name any names, but it was a journalist that we met at the Global Peace and Unity Festival that came up and was asking, what you can tell, like, you're asking like some odd questions here. I think it was on the back of, you remember Wahed had done quite controversial advertising.
TFO things.
Yeah, we're on the tube with like burning the US dollar and this sort of stuff. And she clearly had an agenda of trying to write a hit piece on anybody involved in kind of the Sharia compliance, but just Muslims in general, I guess, right? But particularly on the finance side of things. And yeah, there was just odd questioning. So I gave my D, said, look, give us a call, and if you want to talk about anything, I'm more than happy to talk to you. But like, if you're looking for, I don't know, a negative story, there isn't one here, sort of thing. And she then called up a couple of weeks later, and when I started putting it back on her, being like, well, what kind of story are you looking for? What kind of story are you writing? Because you're asking me lots of questions here, but I feel, and it sounded like she was working with like some crazy dude that seems to think that, like, I don't know, any type of Sharia financing or products were empowering all the negative aspects that sometimes the media paints that comes with Sharia law and this. And we just didn't engage with her. I said, look, if you're talking about my experience with the community, has been nothing but positive. So she was looking for something that wasn't there, and an experience that we hadn't had. But whether that's racism or what, I'm not sure what you'd call that. But
never know someone's intention, I guess.
yeah, we hadn't. Her intentions weren't good, and you can tell with someone's energy sometimes.
Yeah.
She was looking to write a hit piece on someone. Yeah.
I just find it amazing that like you guys have gone on this huge journey, and now you're like fully like deeply integrated into the community now.
Yeah, everyone keeps asking me, I'm going to convert.
Yeah. No, I was going to bring that up, but I'm like, nah, that's too far.
Oh, you know, start trying as well. Yeah. No, but it's all done in good humour, right? Maybe some people are being serious, but yeah, it's a great space to be in. It's a new side of things for me as well.
But just for everyone watching, the key thing is you guys are property developers. On the back of it, to kind of raise money to develop these properties, you've got an investment piece.
Yes.
Which is, and as a result, you've then structured some Sharia-compliant investments.
Correct.
What's next? Are there going to be more opportunities? Are you creating more portfolios, more individual investments? What's on the horizon?
Yeah, that's a good question. We're looking at adding to that range of products. Just like our more traditional products, we always will have an equivalent of that portfolio product. We're looking to do the same on the Sharia side of things. We're on our second tranche of the portfolio product. We're looking at launching a third. We've got a really exciting deal coming up, which is going to be another site-specific one, going into slightly more regulated products. If we can find that way of doing the ISA that I think we're kind of close to doing, I think we've got the right partner to do that with now. Then yeah, I think that would be really big for us, because it's bringing what is still quite a niche market and combining that with mainstream products like the ISAs, the tax wrappers. That's what we're getting asked from our base of Muslim investors now. It's like, when can you give us the tax efficient stuff and what else are you guys doing? And that's it. It's not going to happen overnight. It's not an easy thing to do, but we're looking at getting that done soon, hopefully.
And when you're like landscaping and you're looking at, I know kind of Ahmed touched on this earlier, but you're still seeing like plenty of opportunities there in terms of development and buying and selling.
Yeah, in the property market for sure. Yeah, Southwest is kind of our patch now. We're very well known there. We've got good local people. So our structure, when we've expanded into the regions, we Acorn as a company will own typically 80-90% of that regional office, and we give 10% to the regional MD, roughly that. Not on. It's not always as precise as that, but we make sure that we give them a piece of that region. They're local people with local knowledge. Some of them are ex-national house or from some of the big PLC companies. So we're really getting a great network in those regions. Good reputation. Always we'll have snagging issues. Some people not happy with the finish of a windowsill or something. And there's always things we can do better as a company. But generally speaking, we've got a good reputation for having cash, buying good deals, and delivering high quality schemes. And we see a lot of opportunity still in the Southwest. The Southwest is a great market. You've got your big university towns, your Bristol, Exeter, Cardiff, where we've got offices. It's a great demographic. I think, as I said earlier, the property market hasn't been easy, but the Southwest has kept us a little bit insulated from some of that.
So I think that kind of brings us to a natural end. Just want to say thank you so much for your time, and thank you for what you guys are doing, like creating new products. It's exciting, and creating competition in the market is amazing.
Thank you, and thanks for coming and seeing us.
Let's speak soon.
Thanks, guys.